Budget 2026, the growth agenda.
Welcome to this very special conversation to discuss the fine prints of direct taxation emerging out of budget presented on February 1st. We have with us Ravi Agrawal, CBDT Chairman. Welcome to this very special conversation, sir. I'd like to start by asking you that could you take us through the major reforms under the direct taxes which going to have a direct impact on not just taxpayers but the shareholders, the investors, if you could just highlight those.
Yeah, so if you see the developments in this area in the last about 1.5 years, beginning July 24, initially we started with the simplification of the Income Tax Act 1961, and essentially at that point in time we focused on only simplification of language and presenting the provisions in a manner which was easy for the people to understand and comprehend. This was approved by the Parliament in August 25, and now it is the Income Tax Act 2025 to be rolled out from 1st of April to 2026. So the budget proposals this time is a step 2 in that direction, wherein now the processes have also been looked at and they have been refined to ensure that the tax compliance is made more easy and the tax administration as a whole becomes more efficient and effective.
So with respect to the Income Tax Act, which is going to be implemented from 1st of April, wanted to understand that what's the status of the new forms, and also are you also considering to have a joint income tax return which has been as part of your proposal? So when we could see those coming?
Yeah, so so far as the new rules and forms are concerned, those have been those are in the final stages, and we have done stakeholder consultation and incorporated the suggestions of the stakeholders. But at the same time, we feel that before actually finalizing and really signing it or notifying it, we will again come back to the stakeholders and provide them a small window wherein we get the feedback of actual forms and rules that are about to be rolled out. And after incorporating that, we would further notify it. We plan that we would notify it in February itself, because we're conscious of the fact that with effect from 1st of April 26, when it has to be rolled out, stakeholders should also be given sufficient time to actually make changes within their ecosystem, because those forms would require some changes, some utilities would also have to be developed, and so on and so forth. So therefore, in February itself, we would be notifying these forms and rules.
And what about the joint one?
So far as the joint return is concerned, that is presently not under consideration, because that has its own challenges. And the scheme of the Act presently is not in the context of joint forms as such.
I would honestly say that the chat would be incomplete, sir, without talking about STT. But my specific question, just for the clarity's sake, that people and the experts are saying that this could lead to additional cost. This will act as a, you are unnecessarily increasing the compliance. Why you can't, increase the entry fees to keep the small investor out? Have you discussed this internally when you actually come up with this sort of proposal to increase the STT rates?
You see, yes, we have internally discussed various options that could be there to address this issue, but the fundamental issue on which the proposals rest is one, steep exponential rise in the volumes. This is okay, but at the same time the transaction being speculative in nature and the retail investor largely losing money in this exercise, that is a cause of concern. See, so far as business is concerned, this I would say the tax also is claimed as a business expenditure, right? So if it is a
And
business,
that was concerning for the income tax department.
yeah, so that acts as a business expenditure also, so for a business. So therefore, actually, the small taxpayer, the retail taxpayer, by participating in this and being encouraged through more and more, you find that the statistics reflect that the interest of the retail investor in this area, which is largely speculative, is there. And from the tax department, this is one of the strategies and approach that has been adopted to flag this point and also to
fix it.
Fix it, I would
And
say.
address
Yes.
it. But you have taken SEBI recommendation also on board while deciding on this?
Yes, that is also there. And you would appreciate that there is no change in the cash segment as such, because that is largely related to investment being done. But so far as this activity, that is what the thought is.
Okay. Moving on, sir, on the fact that there are a lot of measures have been taken, proposed to nudge taxpayers. One of that is MAT, minimum alternative tax, which will definitely nudge taxpayer to opt for 22% corporate rate. How that will work, and what's the rationale behind it, and how that is going to impact overall your revenue sort of ecosystem?
So first, the option of being in the old tax regime and the new tax regime that remains with the taxpayer. It is only a question of providing a window for claiming tax credits, and that too in the new tax regime. So you can say that it is a bit of a nudge towards that. But the way the new scheme would work is that it will no longer be a minimum alternative tax, but it will be a minimum tax. Now, instead of 15%, the minimum tax going forward would be 14% of the book profits. Meaning thereby that there would not be any additional credit that would be generated post 31st of March 26. But whatever credit has already been accumulated, that the credit would be available to the taxpayer going forward, with only a condition that this would be availed of in the new tax regime. So in the new tax regime, the rate of tax is 22%, in the old it is 30%. So basically because of this 8%, that is also an advantage to the taxpayer. And the credit that would be available to the taxpayer would be 1/4 of the tax that is computed on the total income, basically. So overall, it's an equitable proposal that has been made, which is actually also beneficial to the taxpayer. It is honoring the commitment of tax credits going forward, and we feel that the taxpayers would take advantage of it.
Quickly wanted to check the status of old versus new tax regime. How much the adoption rate so far, and do we see this phasing out, the old regime?
You see, insofar as the individuals and non-audit entities are concerned, the percentage of people who have actually now adopted the new tax regime is close to about 88% or so.
Okay.
Non-audit firms and other entities, in any case, for them the rate of tax is the same, that is 30%. So it's not an old tax regime or the new tax regime. So far as the corporates are concerned, from an income perspective, if you see, about 60% of the income is now in the new tax regime.
Okay.
Of course, about 50% of the corporates are loss-making, and they are showing losses, and therefore it would not be a much material whether they are in the new or the old tax regime. But this is the overall situation, that 60% of the total income is now being reported in the new tax regime.
Quickly, last two questions, sir. One on the foreign disclosure scheme, which was announced. Of course, we have seen the similar scheme, which was not given you, I would say, the anticipated result. But this scheme, when I was looking at the contour of it, as explained by Revenue Secretary during the press briefing, what make this scheme stand out, and do you have any sort of numbers in mind that this is the number maybe we would get out of this scheme?
Yeah. So you see, once when this act was rolled out in 2015, at that point in time also, as you very rightly said, a window was provided to declare for the assets. But then subsequently, over a period of time, these 10 years, a lot of changes have taken place. And one of the major changes, automatic exchange of information that has stabilized. And every year you get about 35 lakh to 40 lakh pieces of information corresponding to different taxpayers. And that is also now being made available to the taxpayer. Now, as against 15, in 2026, taxpayer is now aware that the department is getting information from different sources, which was not there at that point in time. That is point one. The second is having, this is our experience in the nudge campaigns also, that when we actually reach out to the taxpayer, and taxpayers being some professionals who may have got some ESOP, or they may have opened the bank accounts where some balances are lying. Once that is flagged to the taxpayer, it becomes difficult for the taxpayer to actually now come clean and declare it, because the provisions of BMA would apply. So to take care of such situations, this window has been provided, and in this context, if you see, I think it is a good opportunity for such types of taxpayers to come forward. And
but what is the quantum of that undisclosed asset? You must have some sort of range or some intelligence you must have got. Basis that you must have decided to have such schemes so that you can come forward, come clean.
You see, what I can just indicate is that in the recent nudge campaign that we did concerning this foreign assets and foreign income, about 840 crores of additional tax was paid. About 6,500 crores of foreign income was disclosed in the revised returns and the updated returns.
Okay.
And about 99,000 crores of assets, foreign assets, were also disclosed, which were not disclosed earlier. So this reflects there is a lot of potential in this scheme, and as I mentioned that this is a good opportunity for the taxpayer, small taxpayers, professionals, students, people who have gone abroad for short tenure, and some parked certain money with a small balance, right, which is lying there. That can be also, this is a good opportunity for them to come forward and declare what.
Yeah. And that's the wrap of this insightful conversation. Thank you, sir, for taking out time and speaking with NDTV Profit. Thank you so much.
Thank you.
Budget 2026, the growth agenda.